Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 5 strong buy dividend stocks for July. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. With the month of July here, it is time to take a look at the dividend calendar and find 5 stocks, all with ex-dividend dates in the month of July. This ex-dividend date is the day you must own a stock before in order to be eligible for that next dividend payment. So with them all coming up in the next few weeks, you're not going to have to wait long to start collecting that passive income. And today we're narrowing in on 5 strong buy stocks. We found them using the Tip Ranks dividend calendar. Found under the calendar menu or right under dividends, with the calendar you can go week by week to see what stocks have an upcoming ex-dividend date. We then set our filters to strong buy below to find our list of companies. Just before we jump into our dividend stocks, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Let's dive right into these strong buy dividend stocks for July. First up, with the earliest ex-dividend date, we're taking a look at Korn Ferry. They trade under the ticker KFY, currently priced at $75 per share. Year to date, the stock has gained about 12%, and in the last 3 months is up 6.5%. Korn Ferry is a global consulting firm that specializes in helping companies optimize their workforce and achieve various business goals. They work across industries, focusing on aligning people's strategies with business outcomes, often for large corporations, but also for mid-sized firms and public sector organizations. Their approach integrates data, analytics, and industry expertise. They provide services such as executive searches, leadership development, talent management, organizational strategy, and assessments and analytics. Korn Ferry has been paying a dividend for 10 years, and in the last few years they have been growing it quite aggressively. They have a 3-year compound annual growth rate of 49% for their dividend. Their current quarterly dividend is 48 cents per share for a yield of 2.63%, and their ex-dividend date is July 3rd for payment on July 31st. Their latest quarterly earnings report came out a couple of weeks ago on June 17th. They showed both an earnings beat and record fee revenue growth. Earnings per share came in at $1.32, beating expectations by 6 cents per share, while revenue of $712 million beat by $22 million. Along with that record fee revenue growth, the company also saw significant growth in their digital business. With 4 current analyst ratings, the stock does come in as a strong buy, with 3 buys and 1 hold. And the average price target comes in above $82 per share, implying an upside potential of over 10%. Looking at those price targets down below, we do have an old hold rating from back in May, the more recent ones coming in at 14 and 18% upside. The second stock on our list today is OPRA. Trading under the ticker OPRA, they're currently priced at $20.43. Year to date, the stock has climbed 10%, and the last 3 months is up about 14%. OPRA is a Norwegian technology company known for their web browsers and related services. They focus on delivering innovative, user-centric browsing experiences with an emphasis on privacy, security, and advanced features like AI integration. They serve over 350 million monthly active users globally and have expanded beyond browsers into gaming, fintech, and content recommendation services. OPRA has just been paying a dividend since 2023, and they do pay on a semi-annual basis. And that current dividend comes in at 39 cents for a yield of 4.22%. Their ex-dividend date is July 8th for payment on July 15th. They shared their latest quarterly report near the end of April, where they did come out with an earnings beat plus record revenue growth. Their year-over-year revenue growth increased from 29% in Q4 to 40% in Q1, along with an advertising revenue surge. The company also increased their 2025 revenue guidance to $582 million, following strong Q1 advertising growth. With just 3 current analyst ratings, OPRA does come in as a unanimous strong buy. And the average price target comes in above $27, implying an upside potential of 35%. Looking at those price targets down below, they range from 17% upside to 61%. Moving right along through our list, third today, we're taking a look at nVent Electric. They trade under the ticker NVT, currently priced at $72 per share. They've gained over 6% year to date, and in the last 3 months has actually climbed 33%. nVent is a global leader in electrical connection and protection services. focused on designing, manufacturing, marketing, installing, and servicing high-performance products that connect and protect mission-critical equipment, building, and processes. Their solutions emphasize energy efficiency, safety, and sustainability, supporting a more electrified and environmentally conscious world. The company spun off from Pentair back in 2018 and have been paying a dividend since, so about 7 years now. And their current quarterly dividend comes in at 20 cents per share for a yield of 1.09%. Their ex-dividend date is July 18th for payment on August 1st. nVent did come out with a strong Q1 report at the start of May, with both an earnings and revenue beat and an increase to their future guidance. They reported double-digit growth in orders, sales, adjusted earnings per share, and free cash flow, with sales being up 11%. With that, they increased their full-year reported sales growth guidance to 19 to 21%. There are 6 analysts with a current rating on the stock, and it does come in as a unanimous strong buy. The average price target of $72 is in line with the current stock price, given that recent growth in the last few months. Looking at some of the more recent ratings, though, we do have some upside ranging from 2.5% to about 8%. Fourth on our list today is a company called Concentrix. They trade under the ticker CNXC, currently priced above $55 per share. They are up 29% year to date, but have cooled off recently, down about 2.5%. Concentrix is a leader in customer experience solutions and technology, specializing in business process outsourcing or BPO. The company designs, builds, and runs technology-infused CX solutions to enhance business performance for over 2,000 clients, including more than 100 Fortune 500 companies and over 125 new economy clients. Concentrix just started paying their dividend a few years ago in 2021. And their current quarterly dividend is 33 cents per share for a dividend yield of about 2.4%. Their ex-dividend date is July 25th for a payment on August 5th. They just shared their Q1 earnings report last week on June 25th, where we did have some mixed results with a slight miss on earnings but a revenue beat. While earnings per share of $2.70 fell 5 cents short of estimates, revenue of $2.4 billion did beat by $40 million. The company also successfully deployed its Gen AI solutions at scale across their operations. And with 4 current analyst ratings, it does come in as a strong buy with 3 buys and 1 hold. The average price target is $65, implying an upside potential of 17%. Looking at those ratings down below, they range from an upside of 10% with our hold rating to a high end of nearly 30%. If you've made it all the way to our 5th stock today, then this is a reminder to make sure you've hit that thumbs up button. Last but not least, we're taking a look at NiSource. They trade under the ticker NI, currently priced at $40 per share. Year to date, the stock has gained over 10%, in the last 3 months down ever so slightly at 0.74%. NiSource is one of the largest fully regulated utility companies in the United States, providing natural gas and electric services to approximately 3.8 million customers across 6 states: Indiana, Kentucky, Maryland, Ohio, Pennsylvania, and Virginia. They operate through their primary brands, Columbia Gas and Northern Indiana Public Services Company, and they have the longest history of dividend payments within our group today, with their dividends starting back in 1995. Their current quarterly dividend is 28 cents per share for a dividend yield of 2.8%, and their ex-dividend date is right at the end of the month on July 31st for payment on August 20th. Their latest quarterly report came out near the start of May. They did fall a bit short on revenue, but did have an earnings beat and reaffirmed their full-year guidance. Earnings per share of 98 cents increased 15% year over year. The company launched their Dunn's Bridge 2, making it one of the largest solar generation facilities in the country, and they also saw AI-driven initiatives across operations lead to 60,000 hours of productivity improvement. And with 9 current analyst ratings, the stock is nearly a unanimous strong buy, with 8 buys and 1 hold. The average price target comes in at $43.22, implying an upside potential of 7.6%. And looking at those recent ratings, they range from a slight upside of 2% up to 12%. So that is a quick look at 5 strong buy stocks, all with ex-dividend dates in the month of July. Let me know your thoughts on these companies, which catches your eye the most, and what other dividend stocks you've been keeping an eye on lately. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.